All right, welcome to the daily market recap for Tuesday, December 23rd. In today's video, I'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. Before we get started, just a heads up, we do have a shortened trading day tomorrow for Christmas Eve. Markets will be closing at 1 p.m. Eastern then, and then no trading on Thursday for Christmas, and then we'll be back to a full trading day the day after. All right, starting with the NASDAQ here, really nice day today. Gap down, got bought up, closed right in the upper part of the daily range, right at the highs, up 0.5%, and overall, a really nice first wave lower, higher low, and now we're looking for that consolidation that, at least in the last couple days, we've gotten. If you take a look at other corrections, you've seen that like the exact same thing. Wave lower, second wave lower, but a higher low, a gap up from that higher low. Now we get some contraction. From there, we can get kicked off into a nice start of the 2026 trading season. S&P 500 up 0.5% today, closing right near the high of the day and only a little bit less than 1% off all-time closing highs. I think SPX actually did close at a new closing high, so very hard to be bearish when you have the S&P 500 right there. IWO, the growth stocks of the Russell 2000, gap down today, test the 5-day moving average, and then close kind of middle part of their range, down 0.6%, but still anything over all the key moving averages, I don't see as bearish price action. ARKK, we saw a gap down here, pretty choppy day overall. Tesla was relatively weak compared to the rest of the market. Another rejection off that 50-day moving average, but hopefully we could put in a low here and then start to rally going forward. Bitcoin and Ethereum, whoops, let me switch to that. Bitcoin and Ethereum still relatively weak overall. We had a nice shakeout in the middle part of the day, and we closed in the better part of the daily range. Well, closed for Bitcoin, but still just chopping sideways, still under all the moving averages, not a risk-on signal. Switching to the liquid leaders, WDC, nice shakeout yesterday of the support gap of the 10-day moving average. Today, kind of an inside candle closing at the highs, back over the 5-day, up 0.8%. PL had the gap down along with RKLB. Both got bought back up. This one actually closed at a new all-time closing high after making new all-time highs, so very bullish price action there. COHR up 0.5%, gap down, reclaimed yesterday's low and the close. All of the trading happened within the support gap above the 5-day moving average, so nothing wrong there after a little rejection of that resistance gap yesterday. MU, nice chop day right at all-time highs. Finished the day basically flat, down 0.1%. Eli Lilly down 0.5%, closing in the lower half of the daily range, but still above all the key moving averages. And after that linear pullback, now we've bounced and we continue to chop higher. I don't see anything wrong with that chart. RKLB, this started down about 5.5% today, opened right near the low of the day, got bought up, actually made new all-time highs, and then closed just slightly below yesterday's close, down 0.5%. But when you have a name, a strong name that gaps down and gets bought right back up, that's a name to keep on your radar because it shows persistent buying demand on that gap down or the stress test. Tesla, we mentioned a little bit of weakness today, down 0.6%, but really not doing anything wrong. Chopping just below all-time highs, bounced above the 5-day moving average into that support gap today. Again, just slightly weaker today and on much lighter volume. LITE down 0.7% today, still just chopping sideways after making new all-time highs yesterday. There's still air to the 5-day moving average and the gap zone, so more chop here, especially on the half trading day, I think would be perfectly healthy. And then First Solar, it's been the theme of the year. These solar stocks, they have one or two good days, then they reverse. I was hoping that because it was all the solar stocks working yesterday, we could get through that. Does not seem to be the case. Might have to replace that if we pull back any further. Down 5.3% today. We did bounce at the 20-day. We closed back over the 5-day, but there's not that clean action that you look for out of a market leader. Getting into the industry ETFs, semiconductors had an awesome day today, up another 1%. Bullish engulfing candle. NVIDIA had a phenomenal day today. Let me bring up that chart really quick. NVIDIA up, what was this? 2 point something percent, closed over three resistance gaps over the 50-day moving average. Really strong price action there. We saw some other mega cap stocks acting well. Amazon, Google, and Apple right on the 50-day moving average. That could be the next one to go tomorrow. XME, the metals, precious metals, made a new all-time high today. Definitely getting extended. Silver will be one of the potential shorts that we talk about. Uh, what's the other one? Silver. Gold is a little extended. I tried shorting that with DUST today. Didn't get any traction. And there's one other that I'm blanking on that is extended. But XLF, the financial ETF, continues to act really well. It's hard to get bearish on the market when financials made new highs, put in a nice bear or bull flag, and then broke to the upside. ITA, aerospace and defense, new 52-week highs, actually new all-time highs, and then squatted a little bit to close a little bit below that range, but a new closing high. That same group has stocks like PL, like RKLB, and then KTOS starting to work its way up as well. Let's see, anything else to cover? Software, I'm holding out hope that this market can really digest this past correction and we could start getting going with software stocks, putting in a higher low here on the 10, the 20-day, and that support gap. If this can be just like a nice shakeout and then we could take out that 50-day moving average, again, great start to 2026 would be something like that. All right. Switching to the long and the short setups here. First one we got is Tesla, and we'll sort this most dollar volume to the least, so most liquid to least liquid. Tesla, I think just through 490 probably wouldn't be the part where I would like start a brand new position, but you could add into strength after a nice 5-day consolidation just below highs. Second area is a shakeout of the 5-day moving average and that support gap, a reclaim of that area right around 481. That would be buyable with a stop at the 10-day EMA. ADI, nice push off the lows here and then rally back up. Ugly close followed by a gap up. Now we're tightening within that gap range. Just through today's high, stop at today's low would be the trade there. This one moves a little bit slower, so not really going to move your account unless you size it up. But if you're 80% invested or so, this could be something that you just kind of stack on in the market and get some money to work. Reddit, ugly day today, and we've seen ugly action at these resistance gaps. That's why in yesterday's video and the previous video, we're talking about not buying into a resistance gap. You don't skew the risk reward in your favor if you're buying right where you know there's sellers present. Now we've had a pullback day into the 10-day, into the support gap. Tomorrow, just an undercut of the support gap, the 20-day EMA, and a reclaim of that support gap low would be buyable. And then just keep your stop 2 to 3%. ALAB, monster IPO stock that has gone through its own little basing process now. We put in a higher low, recapture the 50-day moving average, and now just putting in a nice tight day here. This should have one other gap zone. We'll draw that in a second. But today tested the support gap, bounced right at that area. Just another retest of that while the 5-day moving average catches up. Right around the 164 spot is where I'll be watching. Again, not the highest probability setup. I think you could add to it later as we continue to build out to the upside. But this first spot at 164, you could put on 5% position, manage the risk against the 50-day moving average, and go from there. Rivian, phenomenal action this past couple of weeks, breaking out of a multi-month base, basically a multi-year base. Um, has been really tough to get into. I don't have a position just yet on this, but stalking a pullback, very, very low volume on these two pullback days. Bounced at the 5-day EMA, just looking for an undercut and reclaim of that area as the entry. Make sure you're on the right side of the VWAP as well as you're buying it after the shakeout. Then the stop would be the low of Friday's bar. BBAI retested the 50-day moving average and rejected there. If we follow through to the downside, not something that you need to own. But big picture, we've got a very large base here, multiple contractions. This still, I would be treating as a performance booster, not as like if you're just coming back to the market and you want to put on your first 10%, 20% exposure. I always think you should focus on the liquid leaders when doing that. Get money in stabilized stocks and then go after the performance boosters, the higher ADR names. So if that's your case right now, you're 50% or more invested, this could be something you tack on just through the 50-day moving average, stop at today's low. BIDU, really, really nice contraction here. Alibaba, another Chinese equity, looking pretty good. You kind of have an inverse head and shoulders where that right shoulder is higher than the left, which is exactly what you want to see. Super tight price action here. Just looking for a break through today's high, stop under the 50-day moving average. CHYM, nice move off the lows for the IPO, pulled back into the 10-day, got supported, rallied back up. Today, perfect undercut and reclaim of the support gap. That could have been buyable there, and that's the spot that I'll be watching for tomorrow if we get another pullback in the market. AMTM, another IPO name that zooming out, we're just towards the left side peak, not all the way up there at $35, but just building out slightly below. We had the gap up on earnings where it was up a sizable amount. Since then, has consolidated sideways, couple of tests of the support gap here, and then rallied up into a resistance gap. Today, very, very low inside day volume. On half days, I've noticed that some of the like less liquid, higher ADR names, they can make the quickest moves. So that's why you'll notice a lot of these types of names in the watch list today. Uh, you could put them on as performance boosters, see if you get a nice profit cushion, and then hold for a longer move. But on half days, some of these smaller moves or smaller stocks, faster moving stocks, can make sizable moves, and that's why a lot of them are the focus on this watch list. So with this, I would even be ignoring the gap down from today, just to break through today's high, stop at today's low for that trade. PLAB, another name that monster move off the lows, pulled back to the 10-day moving average, now getting super tight here. Just to break through today's high, stop at today's low would be that trade. Again, this is more of a performance booster type name, but a performance booster can turn into a longer term hold if you get that really nice move off, like initially on the breakout. CTRI was on the watch list coming into the day, shake out of the 10-day moving average in the support gap. That was buyable this morning. Now want to see follow through to the upside. So a break through today's high, stop at that 10-day moving average and that support gap low. AXTI, another performance booster type name, has already made a monster move this year. But more recently, pull back in the 20-day moving average, ugly close right on the 20-day, followed by a gap up. We had the shakeout to that support gap to the 10-day moving average yesterday. Inside candle today on just extremely light volume. Another one just through today's high. Stop at today's low would be the trade there. GCT, another fast-moving, lower liquidity name that had a false breakout is that Wednesday, Thursday? Thursday. Then had a shakeout yesterday, shakeout today, but we closed back in that upper range. Now, after two shakeout days, just a break through today's high, stop at the 10-day moving average, just under $40 would be that trade. And last, we have BW. This one put in a nice flag here that eventually broke to the downside, closed under the 50-day moving average, and a lot of traders use that 50-day to stay involved. So likely after 4 days trading below it, lots of people probably stopped out. A break through yesterday's high after today's super tight, super low volume day would be buyable. Stop just under today's low. Then we'll get to the short setups. Same thing, most liquid to least liquid. First one is AVGO, and we've seen a lot of good strength out of semiconductors. AVGO has this broadening pattern or megaphone pattern, whatever you want to call it. We're seeing volatility pick up without price appreciation. We had the gap down on earnings, followed through under the 50-day moving average. Again, after earnings, now just kind of wedging up with the strength of the semiconductors. The stock itself is not acting super well, but because the group is so strong, we don't want to short it on weakness. We want to see it rally up into the 20-day moving average, into that 50-day moving average, and then look for weakness to come in on the day. A loss of the daily view app could be your entry, short, or your stop would be over the 50-day moving average. Microsoft, I'm not personally looking to short this. It's on my short watch list because I have alerts to see if this little flag here is going to break to the upside or the downside. We've seen good action out of Tesla, NVIDIA, Amazon, Apple sitting right on the 50-day moving average, and Microsoft bouncing at the 200-day. If this resolves to the upside, it's just more evidence that we're in a bull market and we're getting more and more risk coming into the market, which is very positive. But watch for a false breakout and then a reversal right at this resistance gap area. If you're going to short, that's the spot that I would look to short. Or if we get like a gap down, loss of yesterday or today's low, you could short it. I'm just using Microsoft as a risk on, risk off indicator for those mega cap names. Carvana, big reversal on Friday. Lost that HVC from the S&P 500 inclusion, along with the 5 and the 10-day EMAs yesterday. Today, nice bounce at the 20-day in the support gap. So we didn't want to short into weakness. We want to see it rally back up into that high volume close right around 450, then start to look for weakness as it comes back through the daily VWAP. Don't just short it as it continues to rally, right? You want to see some evidence that sellers are coming in as buyers are just trimming into strength, whatever. You want to see that market dynamic change after a little bit of a rally into a key spot. Then you can keep your stop above yesterday's high. CLS, we've lost the 50-day moving average after a gap down right at highs, which is not a great sign. Now we're getting nice and tight on the 50-day moving average and the 20-day moving average. Looking for an uppercut and failure of both of those levels, right around that 310.60 level. Loss of the daily VWAP would be the entry. Stop would be 2 or 3% above today's high, today's high, the 50-day moving average. PAAS, it's a silver mining stock. It's been on a monster tear this year. I kind of think these moves continue until at least like the end of the year, but it's time to start looking at the short side. If you're long these names, just disregard what I'm saying because it's in a nice clean uptrend. You've got your trailing stop. It's a winning trade and a winning theme. Let it continue to work for you. But if you're like me on the outside looking in, the risk reward trade isn't to be buying silver and silver miners right here. It's to be playing that other side. Now that trade might not be ready just yet, but what I would be looking for here is a unfilled gap down. We we have kind of a hanging man candle here where we saw some weakness come in, but by the end of the day, it got bought right back up. We closed in the upper half of the range. Now, a hanging man candle by itself doesn't do anything, but through those lows could be shortable or a gap down opening range break to the downside, shortable stop at today's high. MMYT, we've actually seen really good price action from the leisure and entertainment group. MMYT stage two uptrend, stage three top, stage four downtrend. Now we've rallied off the lows here. So anyone who tried to short this on after it's already been extended to the downside, they got their face ripped off like many late shorts do. Now we're starting to churn here and consolidate, which it could be consolidating before a next move up, completely possible. Or if we're looking on the left side of the chart, we're running into previous support, now turned potential resistance. And big picture, looks like we're just revisiting that stage four breakdown area. So anyone who bought here and then got trapped on that sell off, they're basically break even on their trade, maybe a percent or two down still. And now we get the gap down today, a tight close over the 5-day EMA, but just looking for a break through today's low, stop above yesterday's high for that stage four downtrend to resume. ZSL, this is an inverse silver ETF. Big move down today on the highest volume ever. This is the type of price action that you see before a major turning point. So I know it's on the short watch list. It's just an inverse ETF, so whatever you want to call it, it's short exposure to the market. And we've gotten the gap down and big push down today on this on big volume. One more gap down on this, so a gap up in silver tomorrow, then a loss of the daily view app. That would be the short trigger. And you want to, in a perfect like parabolic top, you'll see price action make a peak earlier in the trading day, like pre-market, and then during market hours, you don't see price retake that high. If you see price retake that high during trading hours, chances are that the top is not in, and we continue to rocket higher. So when you trade these parabolic moves, you need to stay on the correct side of the daily view app. Everything good with the trade will happen, well, if you're buying an inverse above the average daily volume or average weighted volume price, the daily view app. Everything bad that can happen to you when you're buying this will happen if price is below, because these parabolic moves, they go longer than anyone expects. That's why they're parabolic. Um, so just be careful. If this is not in your playbook, you don't need to trade this, especially on the half day before Christmas. You don't want to ruin your Christmas by trying to trade a brand new setup. But this is something that I'm familiar with, and something that I'll trade. Looking for a gap up in silver, gap down in this, recapture that daily view app. Stop would be whatever the low of the day is. Platinum, same story. That was the other one that I was blanking on earlier. This one, PLTM, highest volume ever today on another gap up, very strong close, exactly the same scenario. Looking for one more gap up, and again, pre-market, put in the high. During market hours, don't overtake that pre-market high. Lose the daily VWAP, and that would be the short versus whatever the high of the day is. ARQQ, a quantum name that is still very, very weak. We saw all the quantum names reverse today after Monday's pop, today with a little gap down. Still just looking for a little rally back up into the 10-day moving average, into that gap zone, so then we can keep our stop over the 20-day EMA. And lastly, we have NEGG. This was a name that made a massive move earlier in this year from like $3 up to $130. Had a secondary move here, kind of got nice and tight. And instead of breaking out of this nice consolidation, we started breaking to the downside. And really, like these moves after a stock makes a massive move like this, they don't get, they're not easy to trade on the way up. Like nailing this move is relatively difficult because there's so much strength until you get that break. The secondary rally is tough, but it's really once the stock is completely ignored, people completely forget about it. And I have not seen a single person post about NEGG for a very long time. And after this nice consolidation and we broke the 50-day moving average, now we're putting in a bear flag. This is the time where you're going to get a nice, easy, well, you still have to manage your risk, obviously, but an easier time to the downside, a more clean move to the downside. Break through today's low, stop above the 10-day moving average on that one. So that's going to be the daily market recap for Tuesday, December 23rd. Again, half day trading tomorrow. Market closes at 1 p.m. Eastern for Christmas Eve. Market is closed on Thursday for Christmas, and then we're back full-time trading on Friday. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great day, and I'll see you guys in the next video. Take care.